بسم الله الرحمن الرحيم. اللقاء الفات حكينا على البالانس شيت. And we stop in this slide. Let's talk about this example. DLK Corporation's bar value per share is $2. The bar value is $2, and the firm has 30 million shares outstanding. يعني 30 مليون سهم outstanding, such that bar value of the firm's common equity is 60 million. 30 million, هذول a number of shares outstanding time the bar value, so we have 60 million dollar. If the stocks were issued to investors for 240 million, were issued 240 million, إذا كان تم إصداره 240 مليون دولار, 180 million represent paid in capital. If you look at here, if the stocks were issued to investors for 240 million, إذا إحنا أصدرنا ب 240 issued, 180 million paid in capital. فهو الفرق إيش هيكون؟ What is the difference? 60. This is the 60. So 60 is the bar value then. Okay? Very simple. I explained this before. So the amount of the firm's retained earnings are the portion of net income that has been retained from the prior year's operations. This is clear. Thus, stockholders' equity is equal bar value of common stocks plus paid in plus retained earnings. So we know the bar value of common stocks. We know the paid in capital. So in our case, if I have just only this information, just go back to the question. If only I have this one and I don't have this one. So I have 60 million is the bar value, and I paid 240 million. So 240 is the amount of the stocks were issued, minus the 60 million is the bar value, is equal, the paid in capital is 180 million. Very simple. Okay? Or and vice versa. For instance, if I give you 60 million is the bar value, and the paid in capital is 180 million, then what is the amount of shares in dollar? That's outstanding. Sorry? Summation of this. So this is paid in capital, and this is the bar value, so they end with 240 million. Okay? So it's just, where is your ears? Is here or is in here? Okay? Just depend on this. So this is the question. And shareholder equity is equal total assets minus total liabilities, and I explained this before. Yeah. When I talk about this area is the current asset, this is current liabilities, and we divided this for long-term liabilities, and this is equity, and this is the fixed asset. Don't forget this. So the asset now, as we said, assets is equal liabilities plus equity. Fine. Then, if I want to calculate equity, so equity is assets minus liabilities. Very simple. Okay? Okay? Let's move to the... I explain what it means liquidity. And these are examples of... And I explain what it means net working capital, which is the difference between the current assets and the current liabilities. Okay? And if we have a deficit, in the net working capital, what we can do then, we have problems in the assets, in the current assets. So it means we have something called insolvency. Insolvency يعني عسر. Okay, and this insolvency is technical insolvency and sometimes is let's say economic insolvency. يعني عسر فني وعسر اقتصادي. This is not in your level, but just give you some important things. This is the balance sheets of the possible incorporations. If you look at the total assets, is equal to the total liabilities. If you look at we compare the total current assets is 477. The total current assets. If you look at the total current liabilities is 292. It means the current asset is doubled than the current liabilities, which indicates a good, healthy situation for the business. It means the net working capital is a plus. To what extent is a plus? So we will talk in details in chapter 4. So the light is green. To what extent is green? This is a big question. And to what extent is positive or negative? We will talk this in chapter 4. And this example checkpoint on constructing the balance sheets of GAPs. And you know this GAP is a well-known company producing dresses, clothes, and this is for fashion as well. So you have accounts. What you have to do is to see these accounts where it's located in the balance sheets. For instance, this is the cash in the current assets. This is in current liabilities. This is the total current assets. This is in the fixed assets. And account receivable is in long-term liabilities. Common equity down in the left, right. Inventories is here, and account payable is the same. And you use this chart to locate the different accounts. Very, very simple, I think. If you are suffering in understanding this, just try to ask me or to do it again. Okay, this is the solutions, the current assets, the long-term assets, then the total is just sum this. Current liabilities.
لو سمحت الاكونتس بيبل مش هي كمان liabilities.
Account payable.
طب ليش مش جمع ضيفها هنا في السؤال؟
We will see why. بيكونوا ال current liabilities. لا زيرو.
تحت accounts payable.
sorry, account payable 2 million. بدنا نشوف why. 2 million 67. Total current liabilities هان مجموعين مع بعض. مجموعين. فارجع انت هان go back. You have current liabilities. Sorry. You have account payable here. And see current liabilities. 2158. So this is the total. This is the total. So it's included within the current liabilities. Okay, I will go back to this. But this is included. The current, here, what is it? Here is the current liabilities, 2 million, which is included the account payable. Okay? So this is the main account, or the total of the main account. This is the analysis of so total shareholders' equity is equal to total liabilities, which is equal to total assets. So this part have to equal this part, same. Okay, again, this is the and this is the solutions of the checkpoints. Go back to this solution, to the checkpoints. You will. I think I explained the meanings of book value. Okay, so, and we say there is a difference or a gap between the book value and the market value. Now the cash flow statement. What is cash flow statement? What is the importance of cash flow statement? Yes.
Cash flow statement is the report to what the company received or spent over a specified period of time that show to us what we received, what we profit, and what we paid cost, use and source.
Okay. Yes.
Yes, explain the cash in and cash
Yes.
cash inflow
Yeah.
and the cash outflow for the company in a specific period.
Yeah, it's okay. It's again related to the changing in the cash flow statement with regard to the cash in and cash out. Okay. What are the main sources of cash? The cash flow statement. In the cash flow statement, what are the main sources of cash? Operating.
Financing.
Yes, financing and investment. So we have three main sources of cash. Okay? So the first one is the operating cash, investing, and financing. So we have cash coming from operations, cash coming from investment, and cash coming from the finance. The cash flow statement is more important than profits, than income statement and the balance sheet statement, because it gives details about the flow of the cash and whether this cash is coming from the main activities of the business or coming from other activities of the business. And generally speaking, the banks and creditors are heavily using the cash flow statement than the other statements. Because, as I said before, the income statement is misleading because it includes some accounts, is not cash account.
Yeah.
The cash flow statement is purely account or cash flow statement for the cash is coming to the business and cash leaving the business. So this is the importance of the cash flow statement. The cash flow statement also is prepared by using the balance sheets and the income statement together and for different period of times. So for instance, when we prepare the cash flow statement, we need the balance sheets for 2 years. This is the first things. And we need the income statement as well. So cash flow statement is a combination of the income statement and the balance sheet statement. So this is why the importance of the cash flow statement. Okay. In preparing the cash flow statement, we have to start from the first point, understanding the uses and sources of funds, or the uses and sources of cash. So this is the first step in preparing the cash flow statement. Some articles or some textbook, they are using the direct methods to prepare the cash flow statement. Let's start from the uses and sources of funds. What it means, uses and sources of funds. As we explained, this is the cash flow statement. Identify all of the sources and uses of cash. What it means, sources and uses of cash. Source of cash and use of cash. What it means, source of cash? It means
From where we get money to our
Yes.
company. We spend.
it means source. It means the source of cash, the source of getting cash, or the sources that increase cash.
Yeah.
The uses
Spend.
where we spend the cash.
Yes.
So it take or a negative sign. So in light of this understanding, we think what areas that increase the sources of cash and what areas that decrease the sources of cash or increase the uses of cash. Okay. Sources and uses influence on the changes in cash. For instance, change in cash balance for 2010 is ending cash balance for 2010 minus ending cash balance for 2009. As I said before, to prepare the cash flow statement, we need 2 balance sheets. So the ending cash of 2009 is beginning cash to the 2010 plus the changes in the cash flow from the operating, from the financing, and from the investments. So the difference here, if you look at here, ending cash balance, with the difference in ending cash balance of 2010 is reflecting the operation, investments, and financing. So this difference. So the changes in cash is equal to the ending cash in 2010 minus the ending cash in 2009, and this is reflecting the sources and uses of cash. Let's go back to the sources and uses of cash. Very simple equation, and you will understand. Asset, again, is equal liabilities plus equity. Okay? Asset is equal liability plus equity. So, the normal things, if the asset increase, it means is financed from the liabilities and equity. Okay? Any increase in asset is use of funds. And in the opposite, any increase in liabilities is source of funds. Okay? Very simple. And vice versa. And the decrease in assets is source of funds. Any decrease in liabilities and equity is uses of funds. Okay? This is the normal. The normal situation of the business is like this. If the asset increase, it means the liabilities increase and equity increase, because this area is funded or financed by this area. This is the normal situation in the business. Okay? So if the asset increase, it is use. If the liabilities increase, it is source. If the equity increase, it is source as well. Let's see a very little example. And you build on this in this example here. As I mentioned before, we need two financial statements to think in the sources and uses of cash. Let's see here, for instance, the inventory. This is 2009, and this is 2010. And here is the change. Inventory was in 2009 96. Then 2010 is 100s. So the change is 4. Now this 4, what it means?
It means minus.
Minus. It's increase. Use. You are right. Use. It means use. It's decrease the cash. Be careful. Decrease the cash. Okay? Let's take another example here. Account receivable. Account receivable was 54 and now is 45. So it is decreased by 9. So what it means? It means source. So it's increase the cash. Let's think in different way. خلينا نفكر بطريقة أخرى. Look at the account receivable. The account receivable was $54. Then in 2010 it is $45. What's happened in this? Why it decreased? Think of why.
We collect money from
We collected more cash.
Yes.
So this is why the cash increased.
Yeah.
Okay? We collected more cash. Okay, let's take another example. Okay? You don't understand. You understand or? No, you don't understand. Look at the account receivable. In 2009, it was 54. The account receivable 54, then it become 45. So it decreased. The account receivable is decreased. The account receivable is coming from where? This is for accounting. Oh yes, this is my question to you now. The important of finance to know who is the mom and dad of the accounts. Okay, not just okay. This is the account. Where this account is coming from? This is the question. Account receivable coming from where? Credit sales. Credit sales coming from where? From sales. Okay, see. Sales produce two accounts. Cash and the credit. Account receivable is a part of the credits. Account receivable. Now, people, if we sold $100 cash, people paid 40%, so $40, and $60 is in credits. This is in this year. In next year, people want to pay for this credit. For instance, they paid $10. So this decreased by $10, so it becomes 50. So this is why it is from 54 to 45, because some people coming to the business and pay back the credits. This is why the account receivable decrease. For the inventory is increased. It means we buy raw materials or inventory. Then when we bought something, we paid cash. So the cash is diminishing or decrease. This is why decrease. Okay, let's take another example here. Equipment is 250 become 310.
We have 140.
Then what is the difference then? 60.
Yes.
Is this source of Fatima? Is this leave Fatima? She will know inshallah. What do you think? Just apply this equation. Apply this. Equipment is asset? Yes, it is assets. So what's happened? Increase or decrease? Sorry? Increase. So because it is increase, it is use. Just go back to the formula. So it is. So why it is the uses? We spend money to buy new machines or new equipments. This is why we're spending more cash. Okay? So this use, it means decrease cash. Let's take another example just to formulate things in your mind, to conceptualize this. We talk about the assets. Let's talk about the liabilities. In the same way, or in the same vein, we don't need this. Okay. Leave this for assets and here for liabilities. So in liabilities, we have account payable. Then we have 2009, we have 2010. Account payable here was 64 and become 70. Source. So source of funds, it's increased cash. So it's by 6 here. So here is source, then it increased cash. Think on this way. Now, if we talk about debts loan, it was 120, then 130. Source. So 10 source of cash. Let's see here, short-term loan. It was 25, it becomes 21. Use. What it means then?
Because we paid.
We paid, yes. We paid in cash to the bank to pay back to the. So it is 4. Then this is use. It means increase cash. Okay. Any question?
In the previous example, account receivable, we put the 9 between brackets as a minus, and it's a source. So it
Which one?
The account receivable. When we said,
In this
in the previous
example, okay.
Yes, account receivable. We put 9 between brackets as a minus.
اوكي. هلا الاكونت ريسيفبل كنا زادت ولا نقصت كانت؟
لا
Increase.
It's a source and increase
It is,
cash.
yes.
Yes. Why we put it between brackets as a
Because
minus?
it is decrease.
We said increase.
Increase. Okay, so it's by mistake. If it is decrease, so it is decrease. If it is increase, it's increase.
It was by mistake.
Sorry? I don't know. Okay, let's go back. Sorry? It doesn't matter who did the mistake. No problem. Okay? We are not locating where is the mistake is. Huh? Okay. إذا فهمنا الكونسبت. What is use of funds and what is the look at this example. It is the same. Look at this example. نيجي البالانس sheets. If you look at the balance sheet, طلعوا على البالانس sheet. So the cash is 4.5. So the cash, this one is 2010 minus 2009. Look at this cash. This cash is the result. Careful, is a result of the activities of the business: operation, financing, and investment activities. Right? To calculate this cash, we have to go through the all accounts. Look at the account receivable. Look at the account receivable, the first one. The account receivable was 139.5 and becomes 162. So it is uses. Okay? Uses of funds. Then look at the inventory. Inventory 229.50 and it becomes 378, increased by 148. Okay, look at the accumulated depreciation here. The normal situation of the depreciation is a source of funds. So if it is decrease, if it increase, it means a source of funds. But there is a special treatment to the depreciation. What is the special treatment? We treat it as a liabilities. So if it is increase, it is a source of funds. If it decrease, it is as uses of funds. Just ignore the sign of the depreciation when it is in the assets. Just ignore the sign. Look at here. It is 382 and 517, which is greater than this. So it is increase. It is a source of funds. So it is source of funds.
The gains and losses, I treat them as
The income statement
yeah,
as a source of funds.
As assets.
No, as a liabilities.
Same
No.
gains.
No. Yes. Income statement. So income is a source of funds. If it is plus, is a source of funds. If it is minus, it is a uses of funds. Okay. So the income statement, the income, is the main source of funds. The main. Okay. And look at the plants it's 1,287,000, 1,327,000. So increase, it is a use of funds. Now look at the liabilities. The same thing, account payable 184, 189, it's increase, it is source. And you do the rest of the accounts. And why did cash balance decline by 4.5? I asked this question because of the changes in the other accounts. Because of the following reasons. Account receivable, inventory, equipments, in general, as I explained before, an increase in an asset account use of funds. Just go back to this formula. Plus equity, so this is increase, this is increase, this is here uses, and this is sources. An increase in asset account, use of funds, use of cash. A decrease in assets, a decrease is the opposite, is source. So if we have like this, so this is source, this is use, and this is use. Okay? And the account payable, this is in the current liabilities. The same thing for long-term liabilities. Retained earnings also is considered as a main source of cash. So if it increases, is a source. So in general, an increase in liabilities, look at the liabilities. If it increases, source of cash. A decrease in liability is a use of cash. You just set this formula in your mind. I will. I'm not. Very simple. This. الكاش assets ماله؟ مين اللي يقل؟ أنا واحد. الكاش اللي يقل ولا مين؟ الكاش قل، ليش؟ لا أنا ما حكيتش هيك. الكاش بيزيد وبنخفض not because of itself, because of other activities. So if it increases, it means the sources of cash is greater than the uses of cash. If it decreases, I mean the cash, it means the uses of cash is greater than the sources of cash. So this account has, many brothers and sisters. That's it. So it's result in from the other accounts, is result in from the sources of cash, assets and liabilities and other accounts. So the cash is not generated itself by itself. الكاش ما بتولدش حالها من حالها, not just generating cash from cash. The cash is generated from other accounts. Is coming from the, let's see, account receivable, account payable, from long-term activities and so on. And this is the summation of, you put the sources, go back to to this, just put the sources in your right-hand side, in the left-hand side, then the uses, and just deduct from each other. Look at here. The sources of cash and the uses of cash. Just this minus this. What we observed, the sources is 216, and the uses is 220. So just deduct this from this. You have the change in cash. Just do it now. What is 216 minus 220? So go back to the minus 4.5. This is the so it's result in from other accounts. Okay. And this is the rule, which is similar to this. Cash flow statement. Then the cash flow statement is coming. The cash is coming from three main areas, as I explained. This is the beginning cash, and this is the ending cash, and the difference between them is the change. So the cash is coming from operation, the cash coming from investment, the cash coming from finance. just to remind yourself. يعني أنا بدي أذكركم بس. From the first meeting, we talk about the T account. And we divided this into current assets, this is current liabilities, and this is here fixed asset, and here is long-term liabilities and equity. This area is operation. And this area is operational activities and influence on the cash flow statement, plus the changes are in the income statement. So income statement account is considered operational activities. And these accounts, current assets account and current liabilities account, are operational accounts. So when we are locating from where the cash flow coming in the operational activity is coming from the income statement, which is the same, then coming from the changes in the current assets and the current liabilities. Done? Now, for the cash flow from investment activities, okay, from investment activities is coming from this area, fixed assets. So the changes in the fixed assets influence on the investments. So if we are buying new machines, new equipment, it means we have investments. The last one, the cash flow from financing, is in this area. This is finance. Plus the short-term loans. Short-term loans is finance. In exception of the current liabilities, just take off the short-term loans because it is finance. And then you add these account to the cash balance. Beginning cash, you end with the ending cash balance. Okay? And this is the explanation of the operating activities, investment activities, and financing. Look at this in here. Next meeting?
Yeah.
Next meeting خلينا بس 10 minutes ونبدأ بشابتر 4. Okay? شكرا كثير لحسن استماعكم، وإن شاء الله اللقاء القادم نحكي بتكملة الكاش فلو ستيتمنت. أوكي، شكرا. يعطيكم العافية.